Would you agree there's a general acceptance that the 232, which I think you helped draft, if I'm not mistaken, with your energy and energy fuels, do you think that that has in itself frozen the market in terms of utilities are nervous about making any kind of decision until the outcome of that is known? Would that be a fair statement?
Yeah, I think that's reasonable. And yeah, just for the listeners' benefits, one of my clients is Energy Fuels,
Yeah,
which was one of the two petitioners. So I have a bit of confidentiality I have
for
to deal
sure.
with.
I
But,
appreciate
but
that.
yeah, the utilities, first of all, felt that the administration was not likely to upset their nuclear fuel purchasing because some of their reactors are in very difficult electricity markets,
Mm.
and any increase in costs certainly is not something they would like to see. But yeah, I was at a big conference in Miami in April,
Mm.
talked to a number of the fuel managers, and they just said, we really don't know the best course of action here. And a couple of them actually said, we really would like to get this behind us, whatever it is.
I want to get onto that side of things because I think the market has discussed at length 232 and what may or may not be in it, what may or may not come out of it. But I want you to talk to me about supply demand. So if we may start with the utilities. These are a bunch of smart guys. They're actuaries in all but name, and they're trying to make decisions based on multiple criteria. Can you give us some sort of insight into that decision making that they've got to go through in terms of that risk mitigation when they're buying?
Yeah, absolutely. Just keep in mind the nuclear fuel cycle, just by the nature of the industry, is quote long term. So, in other words, they have to buy fuel well in advance of when they will put it into their reactor because it has to go through various processing steps, be fabricated, taken to the site. So you've got a pretty, anywhere from a year to a year and a half, but they really start that planning well in advance. And so, the fuel managers with their risk management groups at the utilities are having to look well forward. And, as I mentioned earlier, they protect themselves usually through long-term contracts.
What is long term? What's a term contract here?
Okay, so what I would say one today. We did have a U.S. utility in the market not too long ago, last night in 2018. They were looking for delivery starting in 2020. They would go through 2024, and then they always appreciate a year or two of extension option. So normally they're looking anywhere from 2 to 3 years out, and then for maybe 4 or 5 years. It is interesting, just as a side note, the Euratom Supply Agency just came out with their fuel report, and they said the average contract for their utilities was signed 9 years ago. So keep in mind, these are very long-term planning horizons. And so when something like the 232 comes up, the proposal is they buy 25% of their requirements from newly produced U.S. uranium.
Yeah.
So that's a fairly large chunk of their uranium requirements. So that's what's kind of frozen them, if you want. They wouldn't say that,
Sure.
but it's kind of hindered their planning because they don't know which road to take, particularly for future longer-term contracts, not necessarily just spot buying.
Right. So the utilities are they have a kind of a control on the spot price in the sense that until they start buying, people don't really know where they stand, right? So
Yeah.
Can you just give us a little bit more insight into the sorts of things that are going through their heads at the moment? You met with some of them in April. I guess you speak to them regularly. It's beyond 232, which is the American component to this. There's all of the geographical mitigation of risk. They're not going to buy from one source. That would be problematic, I'm sure, or could be problematic, I'm sure. What are the things that they're looking for in their contracts?
I guess if I have a specialty, it's long-term contracts. Yeah. And what they want is diversity of supply. They have to take that into account.
And what does that mean? What do you mean by diversity?
What it means is geographic region. So then they're looking at political risk, they're looking at transportation issues, technologies. In other words, you can mine uranium underground mining in fairly high risk environments like the Athabasca Basin, where they actually freeze the ore bodies or put in freeze curtains to hold water back. And the other is in situ recovery, where they drill well fields. And so that's, Kazakhstan, Uzbekistan, conventional mines in Africa, they're Namibia, Niger, Australia. So uranium is mined, globally. And it's not like some of the other fuels that if it's a coal source, then you're generally linked to something fairly close at hand. Uranium and nuclear fuel is truly global, and so they have to take into account those sources. And then, as I said, as they move into the fuel cycle to conversion, enrichment of the uranium, and fabrication, there's various facilities around the world. So where do they contract? Again, under acceptable risk, which then drives their, for example, strategic inventory. If you're buying from a region that might be a bit more politically unsettling, you might want to carry more inventory. So it's a pretty complex calculus they use. Now, when I started, the U.S., you usually bought from U.S. suppliers. Yeah. So it was kind of a lot more simple. Now it's truly global.
Yeah, absolutely. The kind of U.S. have kind of, fallen by the wayside for whatever reason, for a multitude of different reasons. And we can get into where nuclear sits, because obviously uranium and nuclear sit side by side, and it's a very emotive subject, as I'm sure you're aware. But just sticking with the utilities for just a little bit longer, if we may. So the utilities I think, would be accepted to. It would be reasonable to say that they are controlling the spot price at the moment until they know what's going on. The spot price is driving the planning for the equities, the public companies that are producing this stuff. And today it's at mid-20s, say. They need it to be 50 plus to be economic. So anything between where we are today and 50 is a moot point. It doesn't kind of shift the dial in any way. So what's got to happen? What's going to happen? Is it just 232?
No, I think 232 just was a complicating factor. In other words, the utilities were beginning to move into an era. I won't get into the other parts of the fuel cycle, but their prices have been significantly depressed. So the utilities, though, are looking as forward. They're seeing higher prices. And so they're trying to come up with a good defensible strategy on how do you cover your future needs in the most economic and under reasonable risk parameters. Yeah. And it's not particularly easy at this point. So again, 232 showed up and they said, well, this just kind of puts a little stop on what we're doing. Because a number of them were looking at longer term contracting, and then 232 came in.
With hindsight, would you have recommended to those two companies that they do submit the petition? Would you have done 232 with hindsight?
As the producers? Yeah, I think as you're probably well aware, what was happening was these longer term contracts at higher prices. The U.S. utilities paid an average of $39 a pound last year for over 40 million pounds of deliveries in a $24 average spot market. So the longer term contracts, which are characterized as legacy, were helping a number of the producers stay in business. But the utilities have been really hesitant to extend or even negotiate new long-term contracts. And so particularly in the case of the US, you were seeing the industry really, production last year was under 1.5 million pounds. This year going to be well under 1 million. And so the producers are really looking at, a situation where trying to keep the lights on. And the other thing quickly keep in mind the 232 is national security. So in the case of the United States, the Department of Defense starts to play a role because whatever their future needs are have to be addressed by U.S. origin fuel. You cannot use any uranium conversion enrichment from any other country.
So that bifurcation in the market, does that mean there's two sets of prices potentially is the solution?
I think it depends on the volume. In other words, if it stays at the 25%, then it's going to be 10 to 12 million pounds a year. So it becomes a fairly noticeable part. But if it's somehow smaller, President Trump could say 6 to 8 million pounds a year. Department of Defense may start buying some.
Where's the real cost in this? With weapons grade enriched uranium, 90% enrichment. Where does the cost come? Is it at the uranium getting it out of the hole stage, or is it all in the enrichment phase? In which case, the uranium components, again, it's irrelevant, isn't it?
It depends on what you're addressing. If it's commercial grade uranium for power reactors, one thing. Uranium is a fairly significant part of that process. Now, if you go into the military side, then it's enrichment, because you've got to get from its natural state to a very high enrichment level.
Right.